Hello, folks. Welcome to Pro Trader Strategies. It's Wednesday, August the 18th. We are an educational company, so if you want that edge, please hit the subscribe button down there at the bottom. That will give you a notification when we're going live. Also, there's a bell in case I come on unannounced. That way you'll get a notification that we're going on talking about option strategies that I find maybe later on in the day that you guys can participate in and learn from those examples, all right? Please smash the like button before you go, and finally comment over at the side throughout this video because I want to know what you guys are looking at. I'll take a look at it here, and you guys will be driving this content throughout the video, so please make sure you guys click on that. All right, so before we get going, let's talk about the economic data. And across the pond, we got producer price index. Remember, producer prices is something that is narrowing it down just a little bit. Remember, we got the consumer price index. That's basically what everybody is having to pay. Now, the producer breaks down, strips you and I out of it, and looks at what the producer is how the producer is being impacted by prices. So PPI, producer price index input, coming in higher than expected at 0.8%, expected to be 0.5%, but the PPI output only upticked by 0.1%, coming in at 0.6%, expected to be 0.5%. So the producer not really able to offset some of these higher prices off to the consumer. That's the difference between the input, what they're taking in, and what they are able to capture going out. And CPI, consumer price index, comes off a little bit at 1.8%. That's the core CPI. Remember, core CPI is going to strip out food, alcohol, and energy because those are more volatile aspects. So 1.8% expected to be 2%, and the CPI, consumer price index, adding back in all that stuff, comes in slightly lower than expected at 2%, expected to be 2.3%. And here in the United States, we got a couple of economic data points of our own. We've got our building permits. Remember, you can pull as many permits as you want, but we've been seeing them act on these permits. The building permits coming in higher than expected at 1,640,000, expected to be 1,610,000. Now, so they're pulling more permits. That's usually, we believe that the expectation is they're going to be building those homes. Now, we saw something from the National Association of Home Builders, the NAHB. That number came in a little bit lower than expected due to sticker shock from the consumer. Basically, we're also seeing interest rates possibly go higher. All of those things are causing a little bit of angst in the housing market. So they did pull a lot of permits, but they did pull back on some of their starts. They were expecting around 1,600,000. They came in at 1,530,000. So a slight miss on that headline number. And then we also have crude oil inventories. We've been seeing builds happen here in the crude oil, but we see a drawdown this month or this week. 3.2 million barrels, expected to be 1.5 million barrel drawdown. So better than 1.5 million barrel over expected, drawing down. Now, what do we see from that? Well, they break that down into distillates, gasoline. Gasoline, actually, we saw rise on the inventories, but the distillates, which goes into the manufacturing sector, we saw draw down. So we are seeing a lot of demand coming out of the manufacturing sector. Now, this is something I was saying keep an eye on because the manufacturing sector was looking a little iffy with the Chicago PMI numbers and some of the Empire State manufacturing numbers. Those manufacturing were starting to show some weakness, but we're seeing demand come out of the polypropylenes of the distillate, the distillates of the crude oil. All right, Lean Six Sigma, folks, streamline that process so I don't mess up, and remember to actually share the screen. So let's take a look at the markets now. Crude oil is unchanged at this point in time. We were seeing some weakness, and I thought we were going to go down, break below the value area high here. We are building up a node right in and around that $65 a barrel mark. We came down and tested 65, but bounced up and away yesterday. Last 3 days, for the most part, we've gone down there and tested that value area high, but we have not been able to break back down into the area where we would see the most time and volume, basically 70%. But you can see that we are really accepting value at these levels. We're going to soon see this paradigm shift up to about 65. That's going to be the point of control. The point of control is where the most time and volume is going to be spent. And as you can see right now, we can see the volume node is really starting to build here. So we can easily see this paradigm shift today. Acceptance of value at higher levels will get the shorts on their heels, okay? Gold futures coming off, looking like a bit of a topping pattern here. If we kind of zoom in on this here, we can see that we have that topping pattern and a confirmation. So a settlement below our Fibonacci here, especially basically 1783, would be a settlement that would cause the bears to really start taking control here and a push down to what we're looking at about 1730. All right. So that would be, another 50 points lower here in gold futures. Bitcoin finding a support on this 61 Fibonacci. You can see here that's lining up with 43,788, at least as of now. You can see it's bounced in the past couple of weeks a few times off of that level. So that is a solid line that we can keep an eye on for support in Bitcoin. I would expect it to kind of stay up here. We've seen a lot of tailwinds in Bitcoin recently as Venmo and some of these other companies are starting to accept Bitcoin for transactions on their platform. So right when I was thinking we were going to see a pullback in Bitcoin into the 25,000 handle to cover a gap that we've seen from back here late last year, I could call it really. And we could see this gap. Usually we like to say the gaps are going to get covered. We haven't covered this one here. So that was in that area where I was looking at about 25,000 on that handle to cover that gap and fill that low volume area in. We haven't done that yet, but it's not out of the woods. It's a target that all chartists will continue to keep an eye on. Now, something to note about that gap that people were talking about not too long ago is this gap right here in between there. That has been traded in a previous time frame. So that isn't necessarily a gap, but you can see there was actually never any volume traded in this 25,000 handle really. So that is something that needs to be revisited at some point. Now, it doesn't always happen right away, but just keep that number in the back of your head that is something that the market will look to revisit at some point in time in the future. All right. Bonds are just slightly off by about a half a point on the day. We're continuing to see, today everybody's talking about the FOMC and the minutes that are going to be coming out. Folks, this is a lagging indication. We are already hearing Fed governors speaking. Rosengren talking about the Fed slowing on the asset purchases, which is basically buying bonds, suppresses interest rates. And so I don't think we're going to see a whole lot out of the FOMC statement other than it's probably slightly dovish compared to what the hawkish talk we've been hearing out of like Rosengren and some of those other Fed governors acting a little bit more hawkish. And then so that's about it for that. Later on, we're also going to get some good economic data tomorrow that we're going to keep an eye on to move these markets. But I think everybody's kind of on a wait and see what the Fed says today before we start making any real major moves here in the markets. VIX is moving a little bit higher. We had a nice pullback off of those lows yesterday. I was thinking if we got this settlement yesterday below the previous day's wick, that was going to be a solid confirmation. Now we are looking at a confirmation here, folks, but it isn't one of those ones that you would write a book about on a top pattern, but that is looking pretty bearish for me. And I've talked about this for some time now as we're winding up. We haven't really gone anywhere. We're seeing the markets pop and pull back depending on what day we're looking at. Some days NASDAQ is weaker than the Dow and things like that, but that's all this sector rotation and winding up of this tightening rubber band. And the longer and longer we stay here at these levels, we're going to have a tendency to pop in one direction or the other. I've talked about how I think the pop is, or the risk is to the downside. Yesterday I even said, get them while you can, not while you need to. That is an old floor adage that we would talk about while you're looking for some kind of hedge. The last moment in time that you want to be looking for a hedge is when you need it. All right. Put those hedges on while you can, not while you need to, because it just does not work out very well if you are panicking and trying to trade. Okay. So stay mechanical. And we can see the Dow Jones Industrial Average is one of the stronger equity indices today. E-mini S&Ps slightly off on the day, but for the most part, continuing to see this rotation. Yet last night, not really a whole lot to see here, and I think we're going to continue to see some consolidation today as people wait for the FOMC minutes. I think they're going to not really put on major positions ahead of that, but I don't think we're going to see a whole lot of follow through after that statement. All right, let's talk about my trades. Gamestop. You guys remember I've had on a short trade in here for a little while using options. So it's a synthetic short option strategy. It acts just like the underlying in here. It's actually more of a risk reversal where we aren't the synthetic short we're doing at the same strike. I'm doing it as a risk reversal. This is something you could add around a long stop position, which is what Mark Cuban made very famous, putting this on a collar or a risk reversal. It's a risk reversal when you're looking at it the way I am, but you could look at it as a collar for a trade. And with that said, I went into the October, sold the 185 calls in there and bought at the same time the 170 puts. Now, what that does is my short calls pays off some of the extrinsic value of those in the money or those puts, so I can lower my my overall cost outlay on those puts. Now, we've seen the market slightly come off here. I got a collection of 75 cents in this trade, so my break even is upwards around 184.25, right? Because we take the credit, subtract from that call. That is where my break even is. Now, we haven't tested this trade. It's only really traded sideways, but I've just decided to pull a time ripcord on this trade. It is up pretty decent from the time that I put this trade on. So I covered this yesterday right on the close for $11.15 credit. So putting my trade down here at around 170 or 169. So you can see I basically covered this very near the high yesterday. So you can cover that trade a lot better than where I did. It was not a very good out, but I got nervous and decided to pull the ripcord. It just didn't. There's too much risk to the upside in that GameStop. I was hoping for a little follow through that as they move their focus, the Wall Street bets focus onto something else. Now, NVIDIA, I did cover this today. We bounced off the 50-day simple moving average yesterday, bounced off of it again today, but I finally covered this trade. I've had it on for quite some time. We put it on this topping pattern. We got a nice sell-off where I covered this, scaled out of this trade. If you guys remember, I'll go through this trade really quickly. And we started out on this as the September. I sold the 830 calls in there and bought the 830 puts. That's how you create an exact synthetic short. So we had a synthetic short in this underlying. I went pretty large on this one, but we got the pullback that happened. I covered some of them at around if I take the credit, it was about $55, I think. So if you take 830 minus that $55, I got out of the first tranche at $774.50. The next tranche I got out at $743.90. That was when we just came shy of touching the fib there. And then I rode the rest out through this split. All right, so let's go through the split real quick because I've talked in almost nauseum about the other trades and scaling out of this trade. But let's look at it from the point of view of we starting out with these the September 830 puts. And when I put this trade on, hold on a second, let me get back to this. So we did the September 830 puts in here. I need my pen, make sure we got everything here. So we start out with the September 830 puts. All right, so let's just go with it from that. I'm not going to go into everything that we started out with this trade. But originally I did this for so with the calls and the puts, right? I'm short the calls, long the puts on this, and did it for $5. And I think it was 80 cents, $5.80. And that was a credit. So my break even on this trade is at 824.25. 820. Okay. That's my break even, because you take the $5 credit, subtract that from the 830. That's my break even on those trades. So we already talked about covering the first tranche at 774 and the next tranche at 743. I talked about those the days I did that trade as well. Now we go into this split. What happens on a split when you're trading options? Well, they split your strike price. So if I had one, now I'm getting 4 contracts, okay? So that split happens. Basically, you're just dividing everything by 4. So my strikes now become the September 207.50 calls and puts, all right? So I'm short the calls, long the puts on the September 207.5 strike, right? Because if you multiply that times 4, it comes up to the 830, all right? And with the credit, you would basically divide that by 4 as well. So my break even on this trade is now at the strike, or break even, sorry, is at 206.05. 206.05 is my break even. When you break all of that down, subtract from that, we can see that that's the break even, okay? Now, today, working on this trade to get out of it, I looked to get out, and I was able to trade out of these at $11.65. So the original, if I split all of that up, the original trade on this, you can see, how was I doing this on the breakdown, basically putting me at my out is right around 269-ish on this trade. All right. So trading out of the NVDA trade, nice little profit there. Just wanted to go through how that happens when you have a stock split and what happens to your options. Just remember, your option strikes are cut by whatever that split was. And if it's a reverse repo, then it increases by that. So a reverse split would be, my stock goes from $100 to $200. Now I would have those strikes on for that underlying and the half of the amount of stock on that. All right. What else were we looking at? That's about it for that. GameStop, NVIDIA. I haven't added anything today, but looking at a couple of other ones on Johnson & Johnson. I had an JP Morgan. We got a pull back on this. I was long some puts, JP Morgan. Was long some puts on this. It tagged down there on my strike yesterday and today, and I've been scrambling both days to try and get out of these. It just didn't work. I'm trying to get out about $1 higher now at this point. I thought we were going to get that follow through. It just didn't happen, so I'm kind of chasing it at this point. But might pull this ripcord. I was expecting us to come down to the point of control here and settle down a little bit, but you can see we've rejected this 50-day simple moving average a couple times, so it seems like the banks are going to try and hold on to some value heading into this FOMC meeting today. I thought we were going to see a little bit more weakness on that, because I think the statement is going to be a little bit more dovish than what the hawkish statements we've been hearing out of the Fed since that meeting. All right, that's all I got, folks. Hit that subscribe button before you go, and make sure you click on the bell so that you get a notification if I pop on here unannounced. Smash the like button and comment, because I will circle back around for you folks to make sure everybody is clear of concept before we roll out of here. And that's it. That's all I got for you guys, other than hope you guys all have a great day. And if you can't take that, take it easy. Bye for now.